Hey everyone, welcome back to the channel. If you've ever wondered how the wealthy manage their money differently, this video is for you. Today, we're breaking down 5 financial rules that millionaires and billionaires live by. These aren't just tips, they're powerful habits that create long-term wealth, financial freedom, and generational success. Whether you're just starting out or looking to level up your money game, these rules can transform how you think about wealth. So grab a notebook. Let's dive in. Ever wondered why the rich keep getting richer? While luck, inheritance, or a head start might play a role, most wealthy individuals follow specific financial principles that allow them to build, preserve, and grow their wealth. These aren't just habits, they're rules. Rules that govern how they think about money, risk, opportunity, and freedom. If you want to build real wealth and think like the financially elite, here are 5 powerful rules the wealthy live by. Rule 1. Pay yourself first. One of the most fundamental financial rules the wealthy follow is simple, but often ignored: pay yourself first. Before paying bills, spending on luxuries, or even investing in business ventures, wealthy individuals set aside a portion of their income for saving and investing. This isn't about stashing money in a savings account, it's about prioritizing long-term wealth creation before anything else. Typically, the wealthy allocate 20% to 50% of their income to investments that produce returns: stocks, real estate, businesses, or private equity. Why it matters? By paying yourself first, you're building a future asset base that works for you. Most people reverse this, spending first and saving what's left. The wealthy flip that formula, which is how their money compounds consistently over time. Rule 2. Make money work for you. Wealthy individuals don't rely solely on earned income, money from jobs or businesses. Instead, they focus on turning their income into assets that generate passive cash flow. These could include dividend-paying stocks, rental properties, royalties or intellectual property, high-yield private investments, ownership in scalable businesses. This is the principle of leveraging capital instead of labor. While most people work for money, the wealthy understand that true freedom comes when money works for you, even while you sleep. Why it matters? Passive income is the engine behind financial independence. It gives the wealthy time, freedom, and security, and protects them from depending on a single income source. Rule 3. Protect the downside. The wealthy don't just think about returns, they obsess over risk management. They know that protecting capital is just as important as growing it. That's why they diversify across industries and assets, use trusts and legal structures to protect wealth, avoid speculative plays with no downside protection, ensure assets strategically. Warren Buffett famously said, "Rule number 1, don't lose money." Rule number 2. Don't forget rule number 1. That mindset is central to how the wealthy operate. They may take risks, but they are calculated risks, often with contingency plans or built-in protections. Why it matters? You don't need high returns to build wealth, you just need consistent returns with minimal losses. Wealth is built by not going backward, especially in a volatile economy. Rule 4. Use leverage wisely. One of the biggest differences between the wealthy and everyone else is how they use leverage. The average person uses debt to buy liabilities, cars, vacations, gadgets. The wealthy use debt to acquire assets, real estate, businesses, or investments that generate income. This is called productive debt, and it's one of the most powerful financial tools when used correctly. They also use other people's time, skills, and capital to expand their income, delegating tasks, building teams, or partnering with investors. Why it matters? Leverage, when done wisely, amplifies your financial results. It's not about taking on risk recklessly, it's about scaling intelligently and using systems to do more with less of your own effort or money. Rule 5. Think long-term, act decisively. Short-term thinking is the enemy of wealth. The wealthy play the long game, making decisions based on what will serve them 5, 10, or 20 years from now. But when opportunities arise, they act quickly and decisively, because they've already done the groundwork. They don't jump at every trend or panic during downturns. They invest in assets that appreciate over time, and they understand that patience is profitability. Think of the way they invest in blue-chip stocks with long-term growth, real estate that appreciates over decades, businesses that may take years to scale, relationships and networks that compound in value. Why it matters? The ability to delay gratification and maintain a long-term vision separates those who build generational wealth from those who chase short-lived gains. Wealth is built on discipline, not secrets. There's no magic formula for wealth, but there is a mindset and system. The wealthy follow rules that seem simple, but require discipline, patience, and smart decision-making. They focus on building assets, managing risk, leveraging capital, and thinking far ahead. If you want to join the ranks of the financially free, adopt these rules early. Whether you're earning $30,000 a year or $300,000, the principles don't change. The sooner you start living by them, the faster you can build a life where money is a tool, not a trap. And there you have it, 5 financial rules the wealthy swear by. These principles aren't about being flashy, they're about being smart, strategic, and future-focused with your money. If you found this video helpful, be sure to hit that like button, subscribe for more wealth-building content, and drop a comment letting us know which rule you're going to apply first. Thanks for watching, and remember, it's not about how much you make, it's about how well you manage it. See you in the next one.